The bottom line is, guys, markets are showing some weird stuff. All right, markets are showing some unusual type action. Last chart I want to go to, guys, real quick. We're going to go to the Bitcoin chart because I know so many of you guys are interested. Bitcoin chopping sideways consolidation. Can it break out? If it does, minimal upside to 30,000, 30,500. If it breaks this level at 26,700, watch out below. You're headed to 25 and then down to 21. I, for one, again, weaker dollars not giving Bitcoin upside. Bank stocks are down today. We're not seeing that giving Bitcoin upside. Bitcoin is searching for another catalyst. It doesn't have it yet. We're going to find out what it does in the next couple days. If it doesn't break out in the next couple days, watch out. It's going to start coming in. Mark my words on that one. It probably has about 2 to 3 days of potential for it to go higher. If not, watch out below. The cycle is coming.
Regulatory uncertainty and the recent enforcement actions taken against major crypto exchanges reduce the odds of Bitcoin breaking above $30,000 in the short term, but investors are still bullish. Hello and welcome to Crypto Street. In today's video, Gareth Soloway updates about Bitcoin's current market standing and his outlook for Bitcoin in 2023.
Here's the chart of the S&P 500. Look at this. Look at this pivot point, this trend line right here. Again, this is a trend line going back to August of 2022 through the high pivot here of February. And look at what we just hammered on this morning when we gapped higher on the S&P 500. So again, S&P opened up. It went right into a brick wall. The selling takes hold. What's amazing about this sell-off too, folks, check this out. Look at the dollar today. So if we bring up the DXY chart, look at what's going on here. The dollar is breaking lower. Now, what's so unusual about this is that when the dollar breaks down, generally the markets rally. Generally, it's risk on. That's not happening today. The only reason I'm mentioning that is because eventually the dollar down will be a negative for the markets. All right, right now it's usually, and up until today, it's been a good thing. Take a look at the trend on the dollar. If we go back to the SPY, the trend on the market. The trend on the market's been up because the dollar's been falling. The lower the dollar, the more people think the Fed will have to intervene, right? It's basically factoring in potential intervention by the Fed, whether it's lower rates or just pausing on hikes, all of that fun stuff. Today, there's a difference here. Not only that, we might have a major breakdown in the dollar, which again could encapsulate the potential that the markets, maybe smart traders, smart investors, smart institutions, starting to realize that this market is going towards a recession, that the economy will be in recession by the second half. That has been my call for a long period of time. Next up, let's take a look at gold. Gold is having an epic breakout today. Take a look. If we zoom in on this chart, look at that beautiful flag pattern. Here's your breakout today. And again, look at the move on gold now. From basically at the end of 2022, we were trading around $1,600. We're now over $2,000 per ounce. No one can go on anywhere and say that Gareth was not a bull on gold for the last year to 2 years. All right, ever since we've been sideways consolidation, I've told you all, every single one of you, that this is a bullish consolidation channel and that eventually we're going to break up. In terms of gold, gold's headed up for this 2075 triple top. 1 hit, 2 hits. So if we hit it again, it's a triple top. Usually probabilities dictate on triple tops, you get a small pullback and then you break out. That's exactly what I expect to happen on gold. So again, look for gold to get up there. Do I buy it here? No, you'd wait for a pullback. You're not going to buy it here. Let it hit that double top, triple top. Wait for consolidation. Wait for a bullish pattern of consolidation. That's fine. Take a look at silver. What's going on with silver? Silver, look at this beautiful downsloping trend line. Look at that breakout. Silver actually is very extended, so don't buy it here. Remember, don't be John Q. Public. Don't be the retail investor. Don't chase charts that are vertical, aka Bitcoin when it was at 69,000. Instead, wait patiently. Wait for a pullback. Wait for a chart setup. You will get it eventually. Nothing goes straight up. Nothing goes straight down. Again, chasing is a recipe for disaster. So that's what we're seeing in that scenario. All right.
Bitcoin might have shown strength after successfully defending the $28,000 support amid unfounded rumors regarding Binance. But an interesting development to note is BTC is becoming less correlated to traditional markets after the United States Federal Reserve elected to provide emergency liquidity to banks. This change in attitude from the central bank has caused a shift in the trajectory of U.S. Treasuries as traders sought refuge from the inflationary upward pressure. Bitcoin appears to be agnostic to the movement, and its price has been hovering around $28,000 for the past week. Meanwhile, the yield on the 5-year note fell to 3.50% on April 3rd. a drop from 3.70% in the previous week. Higher demand for debt instruments reduces payout, resulting in a lower yield. The $152.6 billion in outstanding borrowings from the U.S. Federal Reserve's backstop lending program has been the driving factor. The general public's lack of trust in banks has also caused them to reconsider what the Federal Deposit Insurance Corporation is and how the Fed no longer controls the inflation trajectory. The question of whether Bitcoin can serve as a reliable store of value during a crisis remains open, but the 70% year-to-date gains certainly demonstrate a point.
I want to show you some other charts. Take a look at the oil chart here. This is a great chart, guys. Oil is hovering up here. There's a ton of resistance here. I actually am bearish on oil off of this level. OPEC again cutting 1.5 million barrels or so. Look at the rally on oil right up into this resistance level. To me, it is a short. All right, if you look historically when they've done cuts, it usually is closer to the top than the bottom of a move in oil. And again, it doesn't last. The reason they're cutting is because they know the global economy is weakening and there's less demand, so they're trying to compensate. They're not going to be able to compensate. 1.5 million barrels is not a huge amount overall. All right, so let's take a look at a couple other things. By the way, that's 1.5 million barrels a day, not per month. Okay, quick couple other charts here to look at. Take a look at Apple. Apple kissing resistance right up here. This is a level I've gone on record saying this is a huge level of resistance on Apple. Expect it to pull back. I do. If we go to the S&P 500, we're into resistance. I expect us eventually to come back here and eventually to break this wedge pattern. This is a downward move. This is sideways chop. We've been chopping sideways now arguably since mid-2022, almost a year of sideways chop. That's never a good thing. It means you're consolidating the down move. It means you're digesting the down move. That ultimately 8 out of 10 times breaks to the downside. Your target, again, is downside, probably close to 3,300 to 3,000 on the S&P 500. That's this lower range down here. Okay, couple other charts I want to just bring to your attention here as we go through here. And again, these are some pretty remarkable charts out there. Let's go quickly to the chart of natural gas. Now, natural gas continues to struggle. I've gone on record talking about natural gas and what's been going on here. So again, natural gas is trying to put in a little bit of a low here right at this double bottom. Lots of support here. I am bullish on natural gas. I remain so, as again, I ultimately think it's due for a technical bounce. Could it go a little bit below $2 per billion cubic feet, whatever the heck they measure it in? Yes, that is absolutely true. But again, in the short term, risk reward to me makes sense here versus it doesn't make sense buying oil after a huge move up, gold after a huge move up. Again, if you've been listening to me, you have gold from a lot lower levels. You have some physical on you, whatever it may be. That's awesome. And again, that's what I would say.
So what are your thoughts about Gareth Soloway's prediction? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.